Let's talk about the cost of money. Now, when you think about it, money has a price tag. And when you are in the market to get a loan for a home or get a loan for a car, anytime you are seeking a loan product, even a student loan, there's a price tag associated with that money. The person you are, the company you are borrowing money from or trying to borrow money from, they acquired that money at a cost. And we call that wholesale rate pricing or wholesale pricing. It's like buying milk from the farmer, bringing it to your little store and marking it up. You could say, in a way, that is how banks work. Now, there are thousands of different types of banks out there. There are banks, there are mortgage companies, there are mortgage brokers, there are credit unions. At the end of the day, everybody is uniquely different because of the cost of money. Now, let me be very, very, very clear about one thing. Just because you can get money for cheap doesn't mean you sell the money for cheap. That is the difference when you are looking at lenders. When you talk to one lender, when you talk to one mortgage company, or when you talk to your bank, or when you talk to your credit union, you may get a rate quote that is vastly different from the other two. And you may think, well, money's money, right? It should cost the same. Well, even if a credit union and a bank acquire funds from the same source, that doesn't mean they're going to sell it to you for the same source. Let me make sense out of this. The reason why interest rates are so different between banks, whether that's an interest rate for your car or an interest rate for your home loan or anything else, even your credit cards, all of those rates are determined by the person selling you those rates, selling you that product, that loan, I should say. When they sell you that loan, they are adding in their profits. And they do that a couple of different ways. Now, I'll speak specifically to mortgage loans because that's different than car loans and other types of loans. But mortgage loans, mortgage lenders make money by selling you a higher interest rate. Why is that? Well, the reason is because most mortgage lenders, when they meet you and give you a loan or help you find a loan and get you a loan, they will lock in an interest rate. If the interest rate is higher, when they go to sell that loan on the secondary market to Fannie or Freddie, for example, when they go to sell that loan, there's what is called a yield spread or a margin. And that is how they make their money back plus a little extra to go give the next customer a loan. That was the intent of Fannie and Freddie when it was developed. It was supposed to be designed to help banks stay liquid, to keep money around so they can keep helping customers like you and I. So this is why we always say you have to shop your rate. You have to talk to different lenders. It doesn't matter where they got the money from. What matters is how much are they selling it to you for. The cost of money matters. I do not control the cost of money from the wholesale point. But here's how we are set up, just to give you an idea. True Rate Mortgage Group has relationships with investors all over the country. Now, these relationships allow us to offer hundreds, if not thousands, of different loan products. And you could be asking, what products could he possibly be talking about? Well, every buyer is unique. Every home buyer, every person trying to get a home loan is unique. And, some people have limitations or, there's different down payments. I only have 10% down, or I only have a 620 FICO score, or I really need a super low interest rate on an ARM loan, or whatever your needs are. Most lenders are going to offer you what they have on the table. Most banks are going to have simply what they have in-house, which is really usually only 4 or 5 products. Banks don't carry products that are off the shelf. They carry what's in-house. And they do that for a reason, because they specialize in those products. That can be a good thing, but most times it's something that we love to see, because sometimes we'll meet a borrower who will say, yeah, I've talked to my bank and they've offered me this interest rate on this product. And then, but they require this. And we will look at that product and we will say, well, why do you want to put that much money down? And they'll say, no, they just told me that I had to for that product. By product, I mean, what down payment did they require? Well, what if I can give you the same exact interest rate for half the down payment, or even 3/4 of the down payment. You'll save that money. You'll still get the rate. So more products really just benefits you. And that's what we do at True Rate. We have partners all over the country that give us their best products. These partners that we work with are vetted. They are trusted. They are partners we have that have a 4-star recommendation. They are trusted partners, and we have them submit their best products to us. And we have a relationship with them that allows us to call them and say, hey, I have Mr. and Mrs. Jones, and they are in a situation where they own a business. This is just an example. Mr. and Mrs. Jones own a business. Their tax returns look really terrible in terms of the IRS. They don't show a lot of income. Okay. They write everything off. And can you blame them, right? They write everything off, and they really want to buy a house, and they have excellent income in terms of money coming into the business. So their profit and loss statement for the business looks really good. The problem is that when they do their taxes, they're strategic and they're saving money there. So how do we get around that? Well, first thing we do is we reanalyze their tax returns, because some lenders don't analyze tax returns the same way as others. In other words, one lender may look at your tax returns and give you a number for your income that's different than ours. And why is that? Well, there's just a different formula. We don't know. Some people don't really know how to calculate income. We have pretty strategic measures to calculate income, and that can help. But the more likely scenario there is we're just going to say, you know what, let's leave the tax returns out of the picture. We have many investors who are happy to use your income or calculate your income based off of your bank deposits for X number of months, 12 months, 24 months. So we get 12 months of bank statements from you showing these successful deposits, and we run it through a formula, and we calculate an income for you from that. To give you an example, we recently had a client who was a successful business in town here. Their tax returns, when all the math came in after all their deductions, showed that they earned $6,500 a month, which was not enough for them to buy another house. They had a couple trucks. Their debt ratio was too high. Well, we did the bank statement loan with them, and sure enough, we are now showing $17,000 a month for their income to qualify. So the problem's resolved. So that's a product that we would use for a business owner. Some other examples. What if you have a client who doesn't have a job? Just flat out does not work. We recently had an older woman, a sweetheart of a woman, very successful career, but she hasn't worked in 20 years. That's how successful she was. He absolutely crushed it in her career and made a ton of money and invested it to where she had $5 million in an account, but she didn't have a job, and she didn't want to part with that money because she had plans for it. Okay. So I know you're thinking, well, just use that money to pay cash for the house. It was a $2 million house. So she didn't want to just get rid of that money. So we did a loan where the terms and the requirements of the loan were show us the assets. We ran the credit. It was decent, not great. No job, no income. We don't care about your debt ratio. Just show us that you have that money. Now, this is not an asset depreciation loan for the loan officers out there. That's not what this is. This is just a simple asset recognition loan. So we have a partner who simply looked at those retirement account statements and signed off on it, and we closed on a $2 million purchase in about 3 weeks. And it was one of the easier loans I've done. Now, do you think most lenders have that product? The answer is no, they do not. And why don't they? Because they're not built for it. The way we are built is we are a True Rate Mortgage Group is a sort of like a fighter plane. Okay. We are not big. We are not bulky. We are very, very, very lean. We don't invest money in high operation teams. We don't hire layers of management. We don't have a private jet. What we are is a small, find you the best deal, get the loan closed. We're not just a broker, because that sounds like we're just a broker, but we're not. We actually have correspondent line relationships, which basically means that we can fund your loan in-house. So, way back in the day, there was a notion about brokers, mortgage brokers. Don't work with a broker. Their hands aren't on your file. They're gonna turn around and just pawn your loan off to somebody else. Well, that level of thinking is completely not true, and it hasn't been true for 10 years. The reason why is because we have full control over your loan. So when we turn around and sell your loan or offer your loan to a partner to help us find a product for you, we're still involved in that loan. And one thing that's really important to say here, and I really have to say this, is when I close a loan for a client, whatever kind of loan it is, of whatever product, wherever this loan goes, even if we do it in-house, I am always, always, always the point of contact from that day forward. So 5 years down the line, you want to refinance. 1 year down the line, you want to take cash out. Wherever that loan goes, I am not gone. I am always your go-to consultant. That's what I love about my job. I consider myself your personal home loan consultant. I love the way that sounds. That makes my job so much better than meeting you one day, taking an application, giving you a loan, and sending you on your way. I love the idea of being your go-to for mortgage loans. That's who I am. That's who we are.